transaction successful? Two words. Two words that appeared on the familiar ATM screen on a completely normal Friday morning in February 2026, while Margaret, a 71-year-old retired nurse in Philadelphia, stood staring at the cash dispenser slot below and saw nothing at all. The screen said the transaction was successful. The account had been debited, but the cash dispenser slot was empty. She stood still for a moment, looked back at the screen, looked back at the slot, and concluded the only thing that seemed logical: the machine was malfunctioning. She had walked into this bank branch every Friday for the past 14 years. This ATM had dispensed cash for her hundreds of times, and that morning she just needed to withdraw enough money to cover next week's expenses, and then stop by the bakery next door to buy a loaf of flaxseed bread for her elderly neighbor who lived alone. She didn't get the cash. She didn't buy the bread. She walked inside and asked the teller. The teller checked the system, then looked up with a facial expression that Margaret would not forget for a long time. The account had been debited. The transaction was recorded as completed. The machine was operating completely normally. No technical errors were recorded. The money had left her account. The machine had dispensed the cash exactly as instructed. It was just that the money never reached her, because there was a small device installed in the cash dispenser slot before she arrived, catching each bill right there, holding them inside a small chamber invisible from the outside, while the screen still showed the transaction successful, as if nothing had happened. And this is the part where all the seniors watching this video need to stop and pay close attention to what I'm about to say. Margaret didn't do anything wrong. She wasn't careless. She didn't press the wrong button. She didn't hand her card to anyone. She simply stood in front of an ATM she had trusted for 14 years, and the person who placed that device had been standing somewhere within sight, waiting for Margaret to walk away, then retrieving the device along with all the cash in under a minute. I'm telling you right now that if you've angst until the end of this video, the next time you step up to your familiar ATM or walk into the bank branch you've used for decades, you could be walking into the exact same situation Margaret walked into without realizing it. Not because you were careless, not because you weren't smart enough, but because there are mechanisms operating right now at ATMs right inside bank branches right in front of you that the American Bankers Association, the FDIC, and the United States Secret Service have issued official written warnings about in 2026, but most seniors in America have never heard. This is not generic prevention advice. This is a warning based on official federal agency alerts, and those who know these warnings will be protected. Those who don't will discover it the way Margaret did. Before continuing, I need to be straight about one thing. The title of this video is not clickbait. Everything I'm about to present comes from official documents from the American Bankers Association, from the FDIC, from the FBI, from the United States Secret Service, agencies that don't issue warnings to get views, but issue warnings because they have data showing real people are losing real money in the specific ways I'm about to describe. What makes 2026 different from every year before is not that financial threats targeting seniors are increasing, but that they are shifting locations. For many years, financial fraud prevention advice focused on the online world. But what the ABA and FDIC are warning about in 2026 is happening in a completely different place. Right at the ATM you use every week, right at the familiar teller counter, right inside the bank branch you've trusted for decades. This is not generic suggestion. This is an official warning issued directly to senior customers from federal consumer protection agencies. And the numbers behind those warnings are not small. Skimming now accounts for 77% of all global ATM fraud incidents, with more than 280,000 debit cards compromised in 2025 alone. The FBI confirms total losses from skimming reach $1 billion per year. And that's not even the most concerning figure. In the first 6 months of 2025, Americans lost $240 million to cryptocurrency ATM machines due to scammers luring them, nearly double the rate of the same period in 2024, fast enough that by May 2026, 30 states had passed laws restricting crypto kiosk operations. When 30 states legislate on the same issue in the same year, it's no longer a problem for just a few people. Everything I'm about to present applies to anyone who receives Social Security, visits a bank branch, or uses an ATM, meaning most seniors in America watching this video right now. Let me explain exactly what happened to Margaret, because once you understand how that device works, you'll understand why almost no one realizes they've just been robbed until it's too late. Cash trap device, the name used in the official warning documents from the ABA and the United States Secret Service, is a small device installed in the ATM's cash dispenser slot, exactly where the money comes out. When the machine processes the withdrawal command, the device catches the bills right at the slot, holding them inside a small chamber attached to the face of the machine that the naked eye cannot distinguish from the original design. The machine system doesn't know the money was blocked. From the software's perspective, the transaction was completed, and the successful screen is completely accurate based on what the machine recorded. The person standing in front of the machine looks at the empty slot, concludes it's a technical error, walks inside to ask the teller. And in that short time, the person who installed the device is standing somewhere within sight, watching the victim walk away, then stepping back, removing the device along with all the cash inside, and leaving before the victim can return with the bank employee. The American Bankers Association issued an official warning about this scheme after a series of incidents recorded in Philadelphia and surrounding areas in 2026. The United States Secret Service also issued its own warning. And there's one detail most ATM users don't know. 9 out of 10 cash trap and skimming incidents occur not at bank ATMs, but at machines located in convenience stores, bars, and gas stations, places without bank staff supervision and no regular device inspection procedures. If you're using an ATM at a convenience store near home because it's more convenient, that's a habit worth reconsidering. But cash trap is only one of 2 physical threats targeting your card, and the second threat is far more sophisticated because it doesn't take your money immediately. It takes something even more dangerous. A skimmer is a fake card reader device designed to look identical to the ATM's original hardware and placed over the real reader. When you insert your card, the skimmer reads and stores all the information on the card's magnetic stripe. This technology has existed for years, but modern versions, called shimmers or deep insert skimmers, have completely changed the level of danger. A shimmer doesn't sit outside the card slot, but is inserted inside the slot, thin enough that it creates no noticeable difference when you insert your card. It doesn't read the magnetic stripe, but reads the EMV chip. The chip banks have implemented as an enhanced security layer. And modern shimmers transmit data via Bluetooth, meaning the scammer can sit in a car dozens of meters away and receive all your card information without needing physical contact with the device a second time. You won't see the shimmer. You won't feel it. But there are some small warning signs to notice before using any ATM. The card slot feels unusually resistant. The keypad looks thicker or stiffer than normal. There are small holes or asymmetrical extra plastic near the screen. The simplest way to check is to gently shake the card reader before inserting. Fake devices usually have a different vibration than the original hardware. The important thing to understand is why a shimmer is more dangerous than a cash trap. A cash trap takes the money you withdrew that time. A shimmer takes your card information, and when combined with a captured PIN, the scammer has everything needed to drain your entire account at any ATM, anytime, without needing your physical card. 3 seconds is all the time needed for a shimmer to read the chip. That's why your card should never leave your hand under any circumstances, even if a stranger standing near the ATM offers to help. If you need assistance using an ATM, there is exactly one valid source of help: bank employees in uniform inside the branch, not people standing in line or approaching you in the lobby. If anyone reaches towards your card, walk straight into the branch immediately. If you want to eliminate skimmer risk entirely, use contactless payment through your phone instead of inserting a physical card. Shimmers have nothing to read if the card doesn't touch the machine. And enable mobile alerts on your banking app to detect unusual transactions immediately. If you stand in front of an ATM and the money doesn't come out after the screen says successful, don't walk away. Call the bank right there and request to flag the transaction before leaving the machine. That's the only action that creates a chance to recover the money before the scammer can take the device. But getting your card information is only half of what scammers need. The other half is your PIN code, and this is where an entirely separate layer of devices appears, operating in parallel with the shimmer and invisible in its own way. The most common method is a disguised camera, a small recording device attached somewhere near the ATM keypad, designed to look like part of the decoration, a vent, a corner of the machine casing, or any ordinary object the human eye has no reason to notice. The camera angle is calculated to look straight down at the keypad, recording every key combination you press. In addition to cameras, scammers also use small mirrors placed at an angle to observe the keypad. Simpler, cheaper, and harder to detect because they don't need power or any electronic device. And the most sophisticated version is a fake keypad, a thin overlay placed over the real keypad that records exactly the key combinations you press without needing any camera, any viewing angle, or any lighting conditions. All these devices work on the same psychological principle. You believe you're alone. You look around, see no one standing nearby, conclude no one could see you entering your PIN, and enter it normally. The device doesn't need anyone standing close to work. It records and stores, or transmits data wirelessly while you stand there completely alone. This is why a shimmer combined with PIN capture creates a literally complete threat. The shimmer takes your card's chip information, PIN capture takes your code, and with both, the scammer can create a cloned card and withdraw money at any ATM anywhere in the world, anytime, while your physical card remains in your wallet. This threat doesn't stop at outdoor ATMs. It follows you inside the bank branch. When you conduct a transaction at the teller counter and the employee helps you enter your PIN on the card reader device, that employee is required by bank policy to turn their face away while you enter it. This is not optional courtesy. This is standard policy written into the operating procedures of financial institutions. There have been recorded real cases where employees did not follow this rule, not out of malice, but out of habit, busyness, or insufficient reminders. And in those cases, customers often say nothing because they feel awkward. This needs to change. You have the right to say directly, without explanation or apology, "Please turn away while I enter my PIN." That is a completely valid request according to standard bank procedures, and any properly trained employee will comply immediately. If they don't, you have the right to ask to speak to the branch manager before continuing the transaction. There is only one practice rule, and it has no exceptions. Cover the keypad with your other hand every time you enter your PIN at outdoor ATMs, at teller counters, at any card reader device, even when you're completely sure no one is standing nearby and no cameras are pointing at you. That certainty is exactly what these devices are designed to create. There is a third threat operating inside bank branches that most seniors don't realize because it comes from the least expected direction. Not from strangers, not from devices attached to machines, but from a normal conversation with the person behind the counter. The situation unfolds like this. You're inside the branch, maybe resolving an issue with your account or needing help setting up the banking app on your phone, and the employee offers assistance, saying it would be faster if they hold the phone and operate it directly. The offer sounds completely reasonable. You're inside the bank in front of a uniformed person with a name tag. Refusing seems rude, even unreasonable. And that's exactly the psychological mechanism these machines exploit. The sense of safety in the indoor bank environment lowers your guard to a level you would never allow on the street outside. What can happen in 30 seconds while someone holds your phone with the banking app open is not something you want to learn from real experience. In those 30 seconds, they could execute a transfer, add their device to your account's trusted devices list, meaning from then on, they can log into your account from their device without your password. Or install remote access software that runs completely hidden in the background of your phone, with no icon, no notifications, no sign it's running. This type of software doesn't take your money once and disappear. It allows the controller to monitor every action you perform on your phone, log into your bank account anytime, and move money in small amounts over weeks or months, slow enough not to trigger the bank's automatic alerts, steady enough that the user might mistake it for regular service fees before realizing. This is not a hypothetical scenario. The FBI has given its own name to the expanded variant of this mechanism, phantom hacker scam, in which scammers impersonate Microsoft or Apple technical support, contact victims by phone or email, and ask them to download software allowing remote access to their computer for troubleshooting. Once they have access, they ask the victim to open their bank account to check for any unusual transactions. And while the victim is looking at the screen with the scammer is viewing the account number, balance, and all necessary information. The FBI confirms the phantom hacker scam has caused over $1 billion in losses, largely targeting seniors. And this threat is becoming more sophisticated each month because AI is now being used to create highly personalized fake emails and messages, knowing your name, knowing which bank you use, sometimes even knowing the last digits of your account, making them look so much like legitimate communications that Deloitte estimates total losses from AI-enabled fraud will reach $40 billion in the U.S. by 2027. There is one clear principle to distinguish between a legitimate request and an illegitimate one. Legitimate banks instruct you to perform the actions yourself. The employee explains what you need to do, you enter it yourself, you confirm it yourself. There is no legitimate business reason for a bank employee to need to hold a customer's phone to complete any transaction. If anyone asks you to do that, whether inside the branch, over the phone, or via email, the only answer is to request to speak to the branch manager. That is a completely reasonable request, and any legitimate bank will accept it immediately. Your phone does not leave your hand inside the bank under any circumstances, and do not download any software at the request of anyone contacting you unless you initiated the call first. All the mechanisms I have described so far, cash trap, skimmer, shimmer, PIN capture, remote access software, have one thing in common. The scammers have to do something to take your money. They have to install devices, they have to install software, they have to interfere with the process. This fourth mechanism is completely different. In this mechanism, you are the one withdrawing the money. You are the one walking out of the bank with cash in hand. You are the one going to the machine and depositing the money yourself. The scammers don't need to touch anything. They only need to say the right things over the phone. And once the money goes into the crypto ATM, there is no reversal process that exists. There is no dispute department. No bank can intervene. No law enforcement agency can recover it. The money turns into cryptocurrency in a few seconds, and according to the Spokane, Washington police investigation, most of that money flows overseas to China, Russia, Nigeria through layers of digital wallets designed to completely erase the trail. The FBI and AP confirm this is the fastest growing form of financial fraud targeting seniors in America in 2026. In the first 6 months of 2025, Americans lost $240 million through crypto ATM fraud, nearly double the rate of the same period in 2024. By March 2026, the U.S. Treasury Department reported the cumulative losses from this type of fraud had reached $246 million. Those numbers do not represent careless or uninformed people. They represent smart, careful, educated people, people who were placed in exactly the psychological situation that scammers designed to bypass every normal layer of defense. The psychological mechanism works like this. You receive a call from someone claiming to be an employee of the IRS, Social Security Administration, Medicare, or law enforcement. Their voice is professional, calm, authoritative, and they know your name. Sometimes they know your address, the last digits of your account, or other specific financial details. Information that scammers collected from data breaches or bought from dark web personal data markets. That familiarity creates the feeling that the call is real. The message always follows a similar structure. Your account has been compromised, or you owe taxes and are about to be prosecuted, or your identity has been stolen and is being used for criminal activity. Your money is in danger. But there is still time. If you act right now, the money can be protected by withdrawing it and depositing it into a safe account through the nearest crypto ATM. ARP recorded 70 cases following this pattern in Minnesota alone in 2025. The common thread in all those cases is the time pressure and the demand for secrecy. You must do it right now, and you must not tell anyone, including bank staff, when you go to withdraw the money, because they won't understand and could complicate the situation. The request to keep it secret from bank staff is not random. It is the final layer of protection that scammers need to disable. Because bank staff are the only ones who can stop the transaction before the money goes into the machine. Banks nationwide are now training staff to recognize and intervene exactly in this situation. An elderly customer withdrawing an unusually large amount of cash, sometimes on the phone right at the teller counter, appearing stressed or in a hurry. In many recorded cases, bank staff were the only person standing between the victim and total loss. If a staff member asks you why you are withdrawing a large amount, tell the truth. They are not invading your privacy. They are doing exactly what the bank trained them to do to protect you. The legislative response to this type of fraud has been unprecedented in speed. Indiana became the first state to completely ban crypto ATMs. The bill passed the state Senate unanimously and was signed into law on March 9, 2026, with strong support from AARP. Tennessee and Minnesota followed with complete bans. Vermont extended the moratorium on new crypto kiosks until July 2026. Spokane, Washington became the largest city in America to issue a citywide ban on crypto ATMs. Nebraska passed statewide regulation in 2025 requiring fraud risk warning signs at every machine. As of May 2026, 30 states had passed laws related to crypto kiosks. At the federal level, the Crypto ATM Fraud Prevention Act is under consideration in Congress, requiring machine operators to warn consumers and implement specific fraud prevention measures. The U.S. Treasury Department and ARP are advocating for a mandatory 1 to 24-hour waiting period before crypto ATM transactions are finalized, a pause long enough for victims to realize they are being manipulated before the money disappears forever. When 30 states legislate on the same issue in the same year, and the U.S. Congress is considering its own law, that is the clearest measure of the actual scale of harm occurring. And the self-protection principle is just one sentence. The IRS, Social Security Administration, Medicare, and any U.S. government law enforcement agency will never ask you to transfer money through cryptocurrency. No exceptions, no special circumstances, no emergency situation changes that. The final mechanism I want to talk about does not involve any device installed on a machine, does not involve any software installed on a phone, and does not involve any call from an unknown number. It happens right at the desk inside the bank branch, with a friendly employee sitting across from you in the completely normal atmosphere of an ordinary transaction. And it exploits a social reflex that most older adults were taught from a young age. Don't waste other people's time. Don't seem difficult. Sign where they point and get it over with quickly. The pace of a transaction at the bank counter is not random. The employee hands you the paper, explains quickly in technical language, flips to the next page, points to the signature line, and waits, not in an obviously pressuring way, but in a way that's stopping to read carefully, makes you feel like you're doing something unusual while others in line are waiting and the employee is watching. That is the design, whether intentional or not, and the result of that design is that most customers sign documents they don't actually read. What might be in the fine print of those documents is not speculation. They are things that have been documented in real customer complaints. Automatically increasing credit limits that customers did not request and only learned about when they received a notification letter. Agreeing to share personal financial data with third parties. Signing up for monthly fee-based services that customers never actively requested and only discovered when they saw an unfamiliar charge appear on the next month's statement. The month after that, and sometimes for many consecutive months before anyone noticed. All of this has happened to real customers signing real documents at real teller counters. What needs to be clearly understood is that your right in that situation is not a right you need to ask permission to exercise. It is a right recognized in the operating regulations of every legitimate financial institution. No bank can require you to sign a document without giving you time to read it. The only sentence you need is, "I need a moment to read this." No explanation, no apology, no reason required. If the employee pressures you to sign before you finish reading, request to speak to a supervisor immediately, because that is a sign of one of two things. The employee was not properly trained, or there is something in that document they don't want you to read carefully. If you look at this month's statement and see a fee or service you don't remember signing up for, call the bank and ask this one exact question. Did I sign authorization for this charge? And if so, which document did I sign it on? That specific question puts the bank in the position of having to provide proof, not you having to prove you didn't sign. And if you signed a document under pressure and later realize you didn't understand what you agreed to, you have the right to file a complaint with the Consumer Financial Protection Bureau at consumerfinance.gov. The federal agencies that exist exactly to handle situations like this. There is one final layer of protection that most seniors have never heard of, not because it is difficult to set up, but because banks rarely explain it clearly on their own. Many states now require financial institutions to offer customers the option to designate a trusted contact, a family member, a close friend, or anyone you trust, that the bank is permitted to contact if they detect unusual activity in your account that shows signs of fraud or financial exploitation. The most important thing to understand about this system is what that person does not have. They do not have access to your account balance. They cannot make transactions. They cannot withdraw money. They cannot change any information. They are the person the bank is allowed to call and say, "We noticed something unusual in your loved one's account and want to confirm they are okay." In the context of the 5 mechanisms I just described, the trusted contact system is the safety net that appears at the point where all other layers of protection have failed. When the cash trap has taken the money, when the shimmer has read the chip, when remote access software has been installed, when the paperwork has been signed, when the cash has been withdrawn and the person withdrawing it is on the way to the crypto ATM. At that point, a call from the bank to the right person could be the only intervention still in time. If your bank offers this option and you haven't set it up yet, it's something worth spending 10 minutes this week to do. Before ending, I need to be honest with you about Margaret. She is not a specific person. There is no retired nurse named Margaret in Philadelphia with the exact story I told. Margaret is the name I gave to the thousands of real seniors whose stories are in the reports, in the complaints, in the investigation files of the ABA, FBI, and law enforcement agencies across America. The woman standing in front of the ATM in Philadelphia, looking at the empty cash dispenser slot, while the screen said the transaction was successful, she is real. The person who lost tens of thousands of dollars through a crypto kiosk in Indiana while on the phone with someone claiming to be an IRS employee while standing at the bank withdrawal counter and real. The senior who signs a stack of papers at the desk in their familiar branch and then discovered an unexplained service fee appearing on the next month's statement, and the month after that, she is real. Margaret is all of them. And Margaret could be the person sitting next to you at church on Sunday morning, or the neighbor you see every morning, or you yourself, if the information in this video did not come at the right time. There is one last thing you need to know before you close this video. The official warnings from the ABA, FDIC, and Secret Service that I mentioned in this video, the names of those agencies The content of those warnings are being used by scammers as cover for a new wave of fraudulent calls. Seniors across America are receiving calls from people claiming to be representatives of the ABA, the FDIC, the Secret Service, saying their account has been flagged in the new monitoring system, that they need to verify information immediately or pay a processing fee to release the account. Every such call is a scam. The ABA does not call individual customers. The FDIC does not call to request verification. The Secret Service does not call to notify about flagged accounts. All legitimate communications from any federal agency and from any legitimate financial institution come by postal mail, not by phone, not by email, not by text with a link. If your phone rings and the person on the other end claims to be any of the agencies I mentioned in this video, hang up. No explanation, no further questions, hang up. If this video gave you the information you need before you step up to the next ATM or walk into the next bank branch, please share it with a senior you know, especially someone who receives Social Security, someone who regularly visits a bank branch, or someone who uses an ATM every week. One share could be what stands between them and a Friday morning like Margaret's. If you haven't subscribed to the channel yet, please hit subscribe and turn on notifications right now, because this is where I continuously update information like this before it becomes a problem for you or your loved ones. Thank you for staying until the end. See you in the next video.